So today we're going to be taking a look at the third week in my Robinhood challenge, where I'm adding $5 in every single week to a couple different stocks that I have in this portfolio, which is all geared around growth. Now we're going to jump into the portfolio, take a look at each one and seeing how they are performing. Now it's been a little bit of a rough week when I'm recording this, but nonetheless, I do want to show you guys the progress as we are moving forward with this challenge. So let's go ahead and jump onto the computer screen here, and we can see that currently my overall account is sitting at $880.74. Now, if we look at the day when I'm recording this, we are down only 0.14%, which is about $1.21. So nothing too bad. But like I said, the week has been a little bit rougher. Right over here, you can see that we are down 3.73%, and that total dollar-wise, that's $34.16. Let's go take a look at the month. So the month, we're actually still up a positive $23.64. So because we are only on week 3, we're just going to kind of look at that and not worry about the remaining tallies there for now. But what I want to start doing is looking at each of these different companies that we have that we're adding money to. Now, some of them I already had before I started this challenge, so I'll let you guys know. The first one in this list is Virgin Galactic Holdings. This one right over here, I did have a little bit of money before I got started. Most of the ones I got started with are around the $40 range as far as what I have in market value. So you can see here, the average cost for me is $18.86, and currently they're at $17.55. I think they had a little bit of a spike this last week, yeah, because they were at $15 and then they jumped up. So I bought, I think, once already in the $15 range during that week, so I got a nice price point there to lower my average cost. I have about 8.25 shares, which is great, and it's about 16.44% of the portfolio. So not looking too bad. Obviously, I am currently down. My total return right now is negative $10.78. Now, one thing I do want to mention as we go on to the next stock here, these stocks that I have here are definitely growth stocks. That's what they're focused on. They are much riskier than some of your blue chip stocks. So just something to keep in mind when going through the process of wanting to do something like this. You know, if I lose the money from this account, it's not going to make a big dent in my finances. So I am having this more of a risk versus having more blue chip stocks in my portfolio across the board. But anywho, the next one up here is going to be Adobe. So Adobe right now, if I look in the last month, they are actually up 10.23%. My total return on them is only 82 cents, which is about 2%. So if only I got in there at a better shot, or a better time, I should say. My average cost is $469.81. I do only own 0.085 shares of a stock. So, keep that in mind as far as that progress goes. I do have this as 4% of the portfolio, and it is current market value $40.82. I still think long term that this one's going to do very, very well, because YouTube videos and TikToks and all these other things are still going to be really relevant over the next couple of years, if not decades. So I think Adobe is going to continue to do very well. So I'm excited to keep on putting in some money in here. Let's see here. So the next one on this list is going to be with Beyond Meat. So with Beyond Meat right now, in the last month, they're up a total of almost 13%. So I'm actually pretty on par with that return right there. You can see I have 11.69%, which is a total of $4.69. So my market value on this one is $44.67. Not bad at all. My average share cost is $128.07. So right now, definitely buying in would increase that. And then my shares are 0.312 shares, and it's about 5% of my portfolio. So not too shabby with Beyond Meat. I'm still kind of weary on how this is going to work out long term, especially when they have the competition with the Impossible Meat kind of making some big headlines as well too. So we'll see how this goes. I think if we look right now, I mean, you can see these ups and downs, obviously, with how the market was going all across the board, but still a little excited to see how this ends up turning out. I think it'll be very unique long term. Now, before we continue on, if you want to support this channel and continue seeing more of this kind of content, I'm gonna have a link down below for a student loan refinancing. So if you still have student loans, check out some rates to see if you can lower your interest rates and possibly save some extra money. You can use that extra money to invest more into the market like we are doing here today as well. And then next up we have Carvana. So Carvana, let me go to the last month here. So they are definitely down 5.87%, which you can see here. My total return is negative 4.05 with a negative $1.62 in total. So my market value is less than what I paid in. Right now, though, the interesting thing is my average cost is $186.17, where they're currently priced at $178.63. So if I were to buy in right now, I would lower my average cost, which is good if I intend to keep on investing with them long term. And then I currently have 0.214 shares in this company, making this a 4.35% of my overall portfolio. Let me see, what was their 52-week high? 223? What was it? 232. So, I mean, obviously that's not a guarantee that it's going to go back up there, but I like their business model. I think it's interesting. I think it's a little different. It's shopping online for cars, so I will be excited to see how this one performs over the next little while. Cool thing is, for me, they are based here in Arizona, which is where I'm at, so I can kind of, see some of the stuff. I have like one of those actual big shop stuff here where you can see all the cars kind of like a vending machine. It's pretty interesting, to be honest. All right, so next up on this one is going to be PayPal. So with PayPal over the last month, they're only up 0.26%. So for my account, though, based off of how I was obviously buying in with the $5 a week, I'm actually down negative 3.53%, total return of $1.40. So I have 0.203 shares, and again, this is also very close to the rest of these at 4.38% of my portfolio. I still think PayPal has a long way to go. They obviously have a lot of different ventures that they're going into, so I'm excited to see how this is going to continue to move forward across the board. And then let's go ahead and see here. Next one on this list is going to be Twilio. So with Twilio over the last month, they've definitely not been doing as great. So they're down 6% across the board. I'm down 9.31% because of buying in $5 at a time. I bought obviously sometime this week when it was doing much better. So my market value is only $36.28, but not bad. It's only cost me $40 so far. My average cost is $254, and the current price is $231. So if I buy in right now, I will definitely be dollar cost averaging. And then I have 0.156 shares of a stock, and then that is 4.12% of the portfolio, which is really, really cool. So I'm excited for Twilio as well too. I think they have some great opportunities down the road to have continuous growth, hopefully. And then let's see here. So we also have Tesla in here that I am putting in $5 a week. Now they already had quite a bit in this account, so you can see here I already put in 200, but I've been doing $5 a week with all the rest of them. They had a pretty rough week, so let me go back to the week here. So they're technically down 8.5%, but they dropped pretty hard. I think one day was like 20%. I'm still up 71.72%, which is about $143.09. This is why I love fractional shares. So I know sometimes people might give others a hard time about fractional shares, but that's money I would not have been able to make if I couldn't pay for an actual share of Tesla. Now, I do also own Tesla in an M1 finance portfolio, which is kind of like more of my long-term stuff. But anyways, this one I have 0.929 shares, which is about 38% of my portfolio. And then, of course, you can see the average cost here is $214.71, and the current price is $368. So, like I said, this one I bought into a little later, as my M1 Finance one I've been investing in for a little bit longer, and dollar cost averaging, of course, when I can. But obviously it makes it a lot difficult when the stock price just keeps jumping up like crazy, because when I keep buying in, then my average cost keeps going up. So not a bad thing there. Now, there is one company I might end up adding to this group of stocks here when it comes to buying in on a weekly basis. When it comes to growth stocks, let me see if I can find it on my list here, because I added it to my wish list here, or watch list, I should say. So I sought to do a little bit more research on this company, but the company is called Lemonade. They effectively are an insurance holding company. You can see right over here. They only had, I think their IPO was, July 2nd. So that's when it opened up at $51. They're currently at $52.40. You can see, of course, like some other IPOs, they spike at the beginning, kind of drop, and now they've kind of been dipping a little bit. So I'm kind of just keeping an eye on this company, but I might potentially add them into this weekly challenge, especially if maybe, I think my goal is to maybe get this account to about $10,000. So hopefully the goal is, I put in a couple thousand, and then hopefully the rest for that $10,000 is growth. So that way I have all that extra money that I wouldn't have had if I wasn't investing on a regular basis. So this will be one that I'm going to be looking into. If I add it in, I will share that with you guys in the following week. I am going to be adding in on Monday. I'm recording this on a Thursday, so on Monday I'll add in the $5 for the following week to see how everything is going. One of the weeks I think I did actually end up adding $5 early because of the way the market dropped. So I am going to do that as well too, even though I try to do $5 per stock every single week. If the market drops like 8, 9, 20% or something like that, I am going to be investing more, just so that way when things kind of come back up, I will have gotten those gains and not lost those opportunities just because I'm trying to do it on a weekly basis too. So keep that in mind. It's not always going to be perfectly $5, but my goal is to only be putting in $5 when I can, because I want to showcase that like you can do small amounts and actually have a big impact on your portfolio, to see where it goes and how it's going to have an impact on what you can create in value, as far as putting in $5 now and then pulling out that money later because it has grown, and that's going to be more money in your pocket for other purchases that you want to do or other type of investments, or maybe holding onto it even longer. But the goal for these ones are to hold them at least for a year minimum, because I want to hold back on those taxes that occur if you purchase and sell within less than a year. So if I can, I'll do that. There might be some occasions where I'll sell something, and I'll share that with you guys as I go through that progress when it comes to this journey of investing with the Robinhood and the challenges of trying to get to $10,000 with $5 per stock that I'm trying to buy into. Now, I did mention earlier that I do have another portfolio with M1 Finance where I actually go through and try to build a long-term investing portfolio. And if you want to check that out, you can actually check out the video right over here to see that progress. My name is Dennis, and I will see you in that next video.